What's up, guys? It's Mr.bookiebetts, your hairy friend. Very freaking hairy these days. Gonna get a haircut soon. It's gonna be a whole video. Anyways, I thought I'd make this video tips for investors. We'll get right into it. Platforms. So there's many platforms to invest on, but for beginners, I definitely recommend Robinhood. It's very easy to understand. And yeah, they offer pretty much everything. Coinbase is also good if you're trying to invest in crypto. They also offer stocks. Let's see, and then there's Fidelity, and Fidelity is like pretty much the investing platform for professionals. So it's a little bit more difficult to understand, but honestly, it's not that difficult to understand. I think a beginner could understand it. Let's see. I want to say that Coinbase offers a debit card, which is really, really cool. You have a Coinbase debit card, that looks really cool. And also every time you use it, you get a little bit of, they give you some Bitcoin reward every time you use it. It's not that much. I mean, it's depending on the purchase, but say you make a large purchase, a couple $100, you might get like $10 of Bitcoin. So far, I've only been paid out like pennies, but it's still really cool. Okay, now I'm gonna tell you guys about the different types of stocks you could invest in. So there's capital stocks, and capital stocks is pretty much just individual companies. You're investing in the companies individually. Say Robinhood itself has a capital stock, Apple, Amazon, Sony. These are all capital stocks. Now there's also ETFs. So what an ETF is it's a company that is already invested in all those companies, and you pretty much make money off of their portfolios. Now, building your portfolio, some people stick with capital stocks, some people just do ETFs. Me personally, I like to do both. So I don't like to limit myself to one area of the room. I'd rather have the whole room. Okay, I'm gonna tell you guys the difference between low risk and high risk. So basically, a high risk is kind of a gamble. You're gambling. Maybe it's a company that just came out. Maybe it's a company that's been out for a while, but it hasn't been doing so good and it's constantly been losing money. On the other end, a low risk company is a company that is always making money. Its stock price is gradually going up. Most of the time, it's companies that have been around for a while. For instance, I don't know, I'll just name you guys a couple good companies that I'm invested with. Nike, PayPal, Amazon, Google, Apple. These are all companies that are good companies, good capital stocks, but the safest low-risk companies are ETFs, companies that deal with multiple companies, whether it be real estate or capital stocks. So yeah, I think that pretty much covers it. For all the people out there who are saying like Nike hasn't been doing good recently, well, Nike is a huge company and it hasn't really been that popular here in the United States. Well, it's been popular here in the United States. It hasn't been that popular in the UK. Hey man, it's going good, man, going good. But once it gets popular in the UK again, then the stock price is gonna go up high. It's a good, reliable company. It's been around for a while. It's loved. It's definitely gonna go up in price. It's definitely a low-risk company. Okay, I'm gonna tell you guys the difference between day trading and long-term trading. So there's some people who are just with different companies for a short term. So they'll just be invested in that company for a day. So these are called day traders. So basically they'll buy in the morning and they'll sell at the end of the day, hoping to make profits. So me personally, I like to be invested in companies for the long term. Um, and also, to be honest with you guys, I don't even have enough in my portfolio to be qualified as a day trader. Um, but but I like the long term better. Even if I did, I'd probably stick with the long term. So what long term is you invest with a company and you're with them for the long term. You're not selling at the end of the day. You're not selling at the end of the month. You're not selling at the end of the year. You're with them for a very long time. Now, there's so many good things about this, and it's not, I mean, usually the hype is around day trading because people are like, oh, yeah, like I could put in this amount of money and then make this amount of money at the end of the day. And, the same thing goes with long-term traders. So say you're with a company for the long term and you've been with them for a year and you have thousands of shares with them, then you could be potentially making thousands of dollars. It just all depends on how that stock is doing that particular day or that particular month. But yeah, you could log in and that company's stock price, share price, could go up, say maybe 50 cents. That's 50 cents times 1,000 shares. Say that's $500 right there. Now imagine that times, I don't know, say 10, 20 companies. So this is really good. This is really good. Also, I wanted to say that I'm going to put my referral links for Coinbase and Robinhood. It would be really nice if you guys signed up through those links. And yeah, that would be really cool. When I was talking about being with these companies for the long term, saying like you're not selling at the end of the year, you're not selling at the end of the day, you're not selling at the end of the month, I meant you're not selling everything. So like if you wanted to sell, me personally, I like to sell like my profits. So when I make profits, I usually take them. um, yeah, so I take my profits as they come, I reinvest those profits. But I don't sell all my shares for that company if I'm with that company for the long term. Okay, the last thing I wanted to say is that treat your portfolio, try to imagine it like a store. So I'm in a store right now, and basically I have all these different products. So I'll show you. So we got all these different products here, right? So you see those shirts back there, right? So each one of those shirts, each one of those designs, you have to think of it like a company. And I have a certain volume of each design, right? So if I sell one shirt, right, and I make $5 profit, that's not that much. But if I have a large volume of that design of those shirts, then I'm making good money. Also, when you're with a company for the long term, they show their appreciation by giving you dividends. So basically, they pay you money yearly just for being invested with them. Now, if you're a successful long-term shareholder and you have a lot of shares, say hundreds of thousands of shares, whatever it is, then some of these companies will consider you a major shareholder. And when you're a major shareholder, you own a serious part of the company. So they're going to invite you to meetings. You're going to get paid high dividends. They'll probably send you product, but it doesn't even matter about the product that they send you, because you'll have enough money. You have enough money from working with them anyways, that you could buy all these products. So imagine a full store. They have a variety of different products like my store, and they have a large volume of products, and that's how they're able to make money. So it's the same thing goes with a stock market portfolio. You just need to be invested with a lot of different companies, and you got to have a lot of shares with each company, a large volume of shares. That's it. Thank you guys for watching.